Okay, so um how we all doing? Welcome to today's class. So today we are looking into market structure. Market structure. So um market structure is the basic um knowledge for anyone who would love to learn or trade the forex market. You need to have a clear knowledge of what market structure is, right? And today we are dealing with the fundamentals, the fundamental market structure. I should just add that fundamental. Um, uh, right. Yeah. So we are dealing with the fundamental. Right. So we have the advanced market structure, but of course, since we are just starting out, this is like starting from the beginner to the advanced level. So we have to take it step by step. So the fundamental market structure, for you to be able to trade the forex market, you need to have a clear knowledge and a clear understanding of market structure. Right. And when we talk about market structure, what do we mean by market structure? Market structure is the way, just like the word implies, the way the market is structured, right? The way the market is structured. And for you to understand the way the market is structured, you need to understand the ways the market move. And there are three ways the market move, right? Three ways the market move. We have the um bullish, bullish or trend. And then we have do that as one bullish or uptrend. Second one is bearish or downtrend. And then the third one is consolidation or ranging ranging. Right. Okay. So these are the three ways the market moves. It's either the market is bullish or in an uptrend, or the market is bearish or in a downtrend, or the market is consolidating. That is, the market is ranging. Right. So how do we know if a market is bullish, if the market is bearish, or if the market is consolidating? Right. For us to understand it, we need to then look at the movement of the market. How do we know if the market is bullish? So let's say um bullish. For a bullish market, right? For a bullish market, we have something like this. Market creates a series of up and down, up and down, up and down. And then for a bearish market, we have something like this. Market creates low, up, down, or up, down this way, a downward movement. That's for the bearish. And then from the consolidating, we have, or the ranging, we have market just moving sideways, not up, not down, just moving in that order like that. That's for the ranging. So how do we tell if a market is bullish or is bearish? The way we know if a market is bullish or bearish is the way it gives us a repeated series of highs and low. A repeated series of what? High and low, high and low, high and low, high and low. This is the way we know a bullish market. when you see market move in this position, that is the previous high, when you see a high like this and you see a low, the next high that comes is higher than the previous one. And when it comes down, the low it makes is higher than the previous low. And we can easily do it this way. We can just mark it out this way. Let's call this low, let's call it a low, right? And then we'll call this top a high, right? So the next low, which is this low here, let's call it a higher low because the low is higher than the previous low, right? And then the next high, we'll call it a higher high, HH, higher high, right? Because it is higher than this previous high, right? So in this context, so okay, we have this higher high, we have this higher high, then we have this, we have this higher low. So this is how we know a bullish trend. The way we know a bullish trend is the way it gives us a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, just like that. And the same thing also goes for the bearish trend. The way we know a bearish trend or a downward trend is when it gives us a series of lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So when we see something like this, we see a low or a high. Yes, this is a high, right? And then we see a low, and then this low goes up and then gives us a low, but the low is lower, right? The high, rather, this high, it gives us a low. This is a high, but this high is lower than the previous high. So we call it a higher low. Or let's say a lower high. It is a high, where the high is lower than this previous high. So it is a lower high. Then the next low down here is lower than this one. This one is going to be a lower low. Then the next one is what? A higher low. Oh, sorry, a lower high. Lower high. Right. So just forget about the terms lower high, lower low, lower. It's just a word for us to be able to, attribute to it and understand. But the concept is that when you see market move in this way, when the low created and then the low creates a high, and then the next low that comes is lower than the previous low, you know that this is a bearish trend, right? And for a bullish trend, you know that when you see a low, a high, a low, a high, a low that is higher than the previous low, then you know that it is a bullish trend. And then for consolidation, consolidation is just moving in series of range. It is not high, it is not low. It is just in a ranging market. It's just consolidating, no high, no low. It is just in between, right? So but our attention is not majorly on the ranging market. It's more on the bullish and the bearish because that is what we really want market to do so we can make money out of it. Right. So why do we need to understand market structure? We need to understand market structure because that is how the market moves. It tells us how the market moves. And as a trader that we are, it is market structure that help us to or tells us the story, when as a technical analysis trader, when you want to trade, you need to be able to understand how market has been behaving, right? You need to look at the past behavior of the market, the current behavior of the market to tell what the market is going to do in the future, right? So we don't guess, we don't assume for the market because we are technical traders. We trade what we are looking at. We trade what we see. Market has done some certain things in the previous past. It is doing something currently, and then we want to use that to information to judge what the market is going to do in the nearest future. And that is how we come and then we enter into the trade. So if market has been, for example, if we see market moving in this order, like this bullish trend now, right? Like this trend that we have here, market has been moving in this order, moving up, moving bullish in this direction. So we see markets do, let me remove this. So we see market do this consecutive higher high, higher low, higher high, higher low. That is like the past behavior market has been doing. Then give us this higher high, higher low. And market is currently at this point, which is the higher high. What do you think we will expect the market to do? Give us what? Higher low. And when we see market gives us a higher low, what would we expect? The next thing we'll expect, because judging from what we have been seeing happen in the past and what is happening currently, we will expect that if market should come down to this region, we should expect market to do what again? Give us another higher high. So if we're expecting this, it means that we can literally just come, right, and look for an entry just somewhere around this region, just like that, and then we target the next high that market wants to do, and we try to make money. I don't know if that is clear, right? The same thing also goes for the bearish trend. You see, market has been giving us this series of high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then we see market, this is what market has been doing previously. We have seen this in the past. Market has been doing this in the past. And then currently we see market come somewhere here. What would we expect? The next thing we expect is for market to have been behaving this way from the onset, and then it is here. We should expect that market should do what? Continue the same thing. So it is just like that. So we use the previous behavior of the market and the current behavior of the market to then make our own prediction as to what we expect the market to do next. That is how market structure works. That's how market structure works. So let's take a quick dive into the chart and let's see some chart examples, right? Let's see some chart examples. So, and mind you, just the way we see it here, we have it here in the way we had it here. When market is trying to be bullish, market will not just move in an up movement. It won't just move once to the upside, right? Market will be, it will create just like this one too, that we say this push up, then this push down, this push up, this push down. It doesn't mean that market will just move from here and then straight up. Market will create a series of, ups and down, 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 just like that, but definitely it is coming up, then to give you some ups and down like that, to come down, and then ups and down, ups and down. Market moves in zigzags. Market moves in zigzags, right? So it is not like a straight line, just like we are seeing it like this, right? Just like you are seeing it like this. So yes, look at this. This is a very good example. Let me turn it to a line chart since you have been using line to explain. So let's look at this. Look at what market has been doing. Let's look at this point. Market started from here. Let's use this down here. We have this low. We have this high. We have this low. We have this high. You see that if you look at it, this high is higher than this previous high. We have this high. We have this low. We have this high. We have this low. We have this high. So imagine before all of this happened in the market, I saw the market come down to this point. What do you think I'm expecting the market to do from here? Because I have seen all of this happen in the past in the market, and I see this, and I'm currently here. What am I expecting? The next thing I'm expecting is what? Market should what? Go up. Came up higher high. Maybe I didn't catch this one. Then I see market come down again. I'm here, and I came to the market and I'm seeing this, and I saw the market has been giving a series of higher low, higher low, higher low, higher low, higher high. Then I see this low. What am I expecting? The next thing is what? Take this. That is just it. Like that is it. If I come back to the normal you see, it can be kind of confusing this way you're looking at it. That's why sometimes I switch to line chart so you can use. But if you look at it, the line chart helps us to look at the point where market is reversing. The angles. So all of these old candles you are seeing are not going to be confusing in the line chart. But for someone who understands, because they are beginners here, but for someone who understands how to look at the candlestick and how it works, you can already see the turning point. You see from here, we came down to this point. Now market reversed here and came back here, then reversed here, came back here, then reversed here, came back here. So just like that, just like that. So that is how we use market structure to predict the movement of the market. We use market structure to predict the movement of the market. Let's try and look for a bearish example, right? Let's look for a bearish example. Look at this. We see market give us this. We have this high. We have this low. We have this high. We have this low, lower than this previous low, lower low, lower high, lower low, lower high, lower low, lower high. You see that now? Lower low, lower high. You see? Lower low. So in this regard, what are we saying? If I'm looking at this, if let's say I was somewhere around this region, I was somewhere here and I saw market give me this push to the upside. Because I have been seeing this series of high and low, lower high, lower low, lower high, lower low. And I'm currently here. I can use this now to judge, because to know that this is a bearish movement. So in a bearish movement, I'm not looking for a bullish movement. I'm not looking for bullish opportunity. I'm looking for a bearish opportunity. And now the market has given me a lower high. I want to catch a lower low, because now I can easily join the market to do what? Calm down. Once I come down, market gives me this one again. What do? I join them to come down. Market gives me this one. I join them to do what? Come down, because I can see market moving in a downward trend. Market is moving in a downward trend. So it is that easy. You just need to understand this fundamental market structure. It's very, very important. Having this clear understanding of market structure, this fundamental market structure, how market creates series of higher highs and higher lows, or lower highs and lower lows, right? So we are making this video very, very short and precise. The idea is to keep it very short and precise. So having this understanding alone can help you scale your knowledge and your journey in the forex market. And there is nothing you can do. In fact, for you to be able to trade the forex market, you need to be able to understand market structure. There is nothing you want to. There is no escape route to it. You need to understand market structure. How does market move? Because if you don't understand market structure, there is no way you can understand directional bias. There is no way you can understand liquidity and so on and so forth. So from the starting point, you need to understand the basic market structure. You need to understand the basic market structure. So let's look for, let's see another example, right? So if you are just a beginner, you are just learning the forex market, I would love you to take an education, look at charts, mark out market structure, higher highs, points of higher highs and higher lows. Go and do those, mark it out. Go to the chart, mark it out yourself. If you have any question, you can always reach out to me, because I'll always be available to attend to your questions. You see this now, we have this low, we have this high, we have this lower low. Market came up with this lower high. It was this lower low, right? So in this regard, look at what happened in this place. Market came, gave us this high. Market shifted in this point, right? Give us this high. You see that while we were coming here, what was market doing? Market was giving us a low, a high, a low, a high, a lower low, and then market moved, and this high was higher than this previous one. And after that happened, What did we have? We saw that we had this low, we had this high, we had this low, we had this high, we had this low. Do you get it now? So if I come to the market now, I have seen that market was sometimes looking like it was coming down. Then in the past, and also in the same past, I see that market has now been giving me a series of what? Higher high, higher low, higher high, higher low, higher high. So at this point, when I'm seeing this in the market, I'm no longer trying to pay attention to um what is happening here. I am now paying attention to what is market doing. What am I seeing? So when you come to market, what do you see market doing? Market is now giving you series of higher highs, higher low. It means that market is in an uptrend. What makes us know it is an uptrend is that it's giving us series of higher highs, higher lows, higher highs, higher lows, higher high. So when you understand what it is doing, what do? You capitalize on that movement, on that trend. Higher highs, higher lows. Now we have this low. What do you expect to do? Higher high. And see, market came, give us, you could even see how far it came, give us this higher high. What did he do again? Higher low. What do we expect? Higher high. Just like that. Just like that. So, guys, I want you guys to take your time, go to chat, look at these things, mark it out, right? If you want to do it, you can mark it out and do it the way I was you know arranging it in the with the inscription here, in the line with the line chart here. You can do this, label it, you can just mark it out, go to chart. When you see your chart, just like we have it here, you can come to chart like that, something like this, then you mark it out. I can see this is a high, okay, this is what? A low, right? Then I can see that this is another high that is higher than this previous high, so I can call this is higher high. And what do we have here? That we have a higher low. You can mark it out like that. Do your markup, send it to me. Let me review it if you are correct, because you need to be able to understand market structure. So anywhere you have issues, I can correct it. Oh, that is not it. This is it. This is it. All of that. And we'll look at it together. Okay. So um for today, this is what I want us to touch on, and I want you all to go back to your respective places, do your mark out, do your markups, right? Study market structure. If you don't understand, come back to the video, watch it again, go back to the chart, look at it. This is where your dedication and commitment comes to this market thing, right? So when we do this, you are free, reach out to me, and then, text me, um, send your markups to me. I will help you to review it. We can look at it together, and then um it will be easier for us to continue from there. And mind you, if you are just a very beginner forex trader, you are just learning forex trading, very fresh, very new, I recommend that you um go and read up on what is forex, understanding pips and all of these things. You can go to babypips.com. Go to babypips.com. They have all the basic information you need to know about the forex market, right? So go there, read on it. They tell you what is pips, what is lot size, because we can't really start touching all of that here, right? So that's where your own commitment comes in on your own hand, where you have to, study all of that by yourself. You don't expect us to be doing this and also still be teaching you what is pips, what is lot size and all of that. So you can read those ones. They are not difficult. They are things you just read up by yourself to have a basic knowledge of it. But of course, the important things as regards technical analysis, that is what we are doing here, and that is what I'm putting you guys through. So um I hope that before our next class, you would have been able to get all of this, and I would love to see um your markups. I would love to see your markups. and all. So cheers, enjoy the rest of your day, and I wish you the best. And please be intentional, be focused, take your time to study. If you don't understand, come back to the video, watch it again and all. And then we'll see you again in the next class. Bye.